Hello, and welcome back to our channel. Today, we're addressing a critical issue that's been dominating headlines and directly affecting your finances. The recent tariffs imposed by the US government and their potential to drive inflation. More importantly, we'll explore what financial advisors might not be telling you about these developments. On April 2nd, 2025, President Donald Trump announced a series of sweeping tariffs, including a minimum 10% tariff on all imports and significantly higher rates on select countries and goods. Notably, Chinese imports are now subject to a total tariff of 54%. These measures have sent shockwaves through global markets and raised concerns about rising inflation. The market's response was swift and severe. The Dow Jones Industrial Average plummeted 1,679 points, marking its worst day since 2020. The S&P 500 fell 4.8%, and the Nasdaq dropped nearly 6%, erasing approximately $3.1 trillion in market value. Companies heavily reliant on Chinese and Southeast Asian supply chains, such as Apple and Nike, experienced significant losses. But beyond the market turmoil, there's a more immediate concern for everyday Americans: inflation. Economists warn that these tariffs could reignite inflation, raising the risk of a U.S. recession and increasing costs for the average U.S. family by thousands of dollars. These tariffs act as a tax on consumers. Analysts estimate that the price level could rise by 2.3% in the short run, equating to an average per-household consumer loss of $3,800 this year. Despite these alarming projections, many financial advisors are downplaying the potential impact. Some suggest that markets will adjust, and the long-term effects will be minimal. But let's take a closer look at what this means for you. Inflation erodes purchasing power. This means the money you have today will buy less tomorrow. Essential goods like food, clothing, and electronics could see price hikes as import costs rise. For retirees and those on fixed incomes, this can be particularly challenging. While it's true that markets have historically rebounded from downturns, it's crucial for clients to understand the immediate impact on their portfolios and daily expenses. Diversification and a focus on inflation-protected assets are key strategies right now. So, what can you do to safeguard your finances in this uncertain environment? Here are a few steps to consider. Review and adjust your portfolio. Ensure your investments are diversified across various asset classes to mitigate risk. Consider increasing allocations to sectors that historically perform well during inflationary periods, such as commodities and real estate. Consider inflation-protected securities. Treasury. Inflation-protected securities, TIPS, can help preserve the purchasing power of your investments as they are designed to rise with inflation. Reevaluate your budget. With the potential for rising prices, it's wise to reassess your monthly expenses and identify areas where you can cut back or adjust spending. Stay informed. Keep abreast of economic developments and understand how policy changes may impact your financial situation. Knowledge is a powerful tool in navigating uncertain times. It's also important to have open conversations with your financial advisor. Ask them directly about the potential impacts of these tariffs on your investments and what strategies they recommend to hedge against inflation. Remember, while advisors provide guidance, it's your financial future at stake. Additionally, consider seeking a second opinion if you feel your current advisor isn't addressing your concerns adequately. The financial landscape is evolving rapidly, and proactive management is essential. In conclusion, the recent tariffs have introduced significant uncertainty into the markets and the broader economy. While some financial advisors may downplay the risks, it's crucial to stay informed and take proactive steps to protect your financial well-being. Inflation can erode your savings and impact your quality of life, but with careful planning and strategic adjustments, you can navigate these challenges effectively. If you found this video helpful, please like, subscribe, and hit the notification bell to stay updated on our latest content. Share your thoughts and questions in the comments below. We'd love to hear how you're preparing for these economic changes. Until next time, stay informed and stay empowered.